This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on January 23rd, 2015. Our time is 8:48 Mountain. Our radio show runs on your favorite radio stations, 6:30 CHED in Edmonton, 3 in the afternoon on Sunday. If you ever miss a radio show, they are streaming on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. Subscribe to the podcast. You can listen to it at your leisure. Have it on your portable device. Our radio show is portable. We go anywhere you do with your busy life. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number to speak with Harold, personally and privately, 1-800-432-1022. 1-800-432-1022. And Harold has an auction site. We'll talk about that later, hsfineauctions.com. Our featured diamond of the week from rarecoloreddiamonds.com is a .52 carat emerald cut, fancy intense pink argyle. And we have an outstanding story about diamonds this week from the Financial Times of London. We'll talk about that in the second half of the show. And Harold and I were just saying, the reason we do this show is to help people profit and protect the money that they have. And really, this week was a prime example why you want to listen to our show on a weekly basis. Get our free weekly newsletter from Harold. We send it out via email free of charge every week. Get your name on the list. You can go through it in 5 minutes or spend 5 hours. It's really up to you, but this is why we do the show, due to all the tumult in the markets. Here in Canada, no budget, no federal budget. They have delayed it due to all the turmoil. Bank of Canada coming out and surprising everyone with a rate cut from 1% to 0.75. Also, the EU, as expected, quantitative easing to fight deflation. They are throwing at the market 1.1 trillion euros, 60 billion euros a month. The IMF coming out lowering global growth. There's a Greek election this Sunday. The party that is leading, they don't like the deal that has been struck for Greece to get the money that they have. And different organizations have come out and said, listen, a debt is a debt, and you owe that money, you must pay it. Well, according to this party, they would be quite happy to pull out of the Euroland, and that could definitely send shockwaves through the financial markets. Denmark cut its rates not once, but twice during the week. They are down to negative 0.35. Of course, the week before, we had the Swiss franc coming off the euro peg at 120. We saw the Swiss franc appreciate dramatically. There was one fund in the United States, the Everest Fund, $830 million gone. They were betting that the franc would go down, not up. Also, in the Forex markets, a company, FXCM, needed $300 million to stay alive. A hedge fund manager sent out a note, I'm sorry, I'm a sorry letter to all the customers. I'm sorry I lost all of your money. There's only $200,000 left of the firm's money, if you can believe that. Great week for gold and silver. Gold and silver had an outstanding week. Harold will tell us more, but Harold, this is why we do our show. And this is why we say the things we do. This is why we believe you need to have diamonds, gold, and silver in your portfolio, because we are in very crazy times financially and geopolitically.
Boy, have you summed it up right, Randy, and it was a tumultuous week. It was very, very concerning with a lot of situations happening at this particular point, and a lot of it revolving around Canada. The Canadian dollar has plummeted. It's down 25% from where it was basically just over a year ago. That's concerning, and along, obviously, with the oil prices plummeting, it's just a very, very frightening time in the markets at this time. And again, which is another reason why we say no speculation. You got to be very prudent in these times because you could lose your money so quickly. Just as Randy spoke about just a few minutes ago, how quickly these firms are losing everything. They're making bets going the wrong way. and you're losing all of your clients' money and you're losing all the firm's money. So that's how volatile these markets are. And again, it is not the time to speculate. It is the time to be extremely conservative. The fact is that what happened in Switzerland, the opposite happened in Canada. I mean, where the Swiss franc went up 30% in one day, which is really going to kill their exporting market. Believe me, that is not a good situation. And by the way, when that happened last week, the euro was at 120. The euro is now at 112. It dropped 8 points or 8 euros since last week. That's how volatile these markets are. Your currency can change so quickly that it can put you out of business without you having anything to do with it whatsoever. That's the way the world is right now. Something can happen in the world, and if you're positioned in the wrong way, you could lose everything. You could lose your business, all of your money, everything. Look what the banks are doing in Europe. Negative interest rates. Who in the world is going to pay to keep your money in a bank? That's the most ridiculous thing I've ever seen, and why would a bank do that? If you had $1 million sitting in the bank in Switzerland, do you realize that at negative 0.75% that you're going to pay $75,000 a year just to keep your money in a bank that isn't safe? It makes absolutely no sense, but this is what's going on. Early in the morning, I was watching the news at about 4 o'clock this morning. Couldn't sleep. There's a lot of things going on in my mind, and we saw that the Saudi king had passed away, and they said that oil prices were skyrocketing. Went to my computer, turned on the market, and the oil market was actually down on the day. We're now trading at $46.36 in crude oil. You know, some people look at the situation in crude and say, you know, it's great to have low oil prices because it costs less to travel, heat your home, your car, everything like that. But you're going to see massive bankruptcies. You're going to see massive companies, the small companies first, oil companies that just can't stay in business. They're going to let go an awful lot of people. And then you're going to see the larger companies also go out of business because how long can they sustain selling oil at $40 below production cost levels or more? So this is what's happening in these worlds today. You know, back in 2011 when the U.S. dollar fell to its lowest level of 72.5 cents and gold went to 1,900, that's where the market was in 2011 until the real skullduggery happened in the market. And we all know the reason why gold fell from 1,900 to 1,100. It was made to happen by making it more expensive to trade gold. Gold fell all the way down to 1,150. As we're taping the show today, gold is back up to 1,300. It has actually hit 1,300 this morning as we're taping the show. It's down $13.40. You know, with all the confusion in the currency markets and everything happening in Europe, gold staged a very strong rally. We saw it go from basically 1,150 to 1,300. You've seen a strong move in gold. However, as much as I would love to continue to see gold go higher, I do believe that we are going to see a pullback. I think it has to happen because the American dollar is so strong. It's up another 31 cents today, or 31 points today, a third of a penny, and is trading all the way at 94.55. So to put that into the proper perspective, when we first started recommending gold about 15 or 16 years ago, gold was at $250, and the U.S. dollar was the strongest of all currencies, next to the British pound. So when the U.S. dollar is very strong, gold prices drop, and that's always been the way and the correlation between gold and the U.S. dollar. So back in 2011, when the U.S. dollar was at its lowest level of 72.5 cents, gold was all the way up at $1,900. Now that we've seen the opposite, we've seen the U.S. dollar strengthen. It's no longer at 72.5 cents. It's at 94.5 cents. You've seen a 22 cent move in the price of the U.S. dollar since 2011 when this whole debacle happened. And as a result of that, gold has dropped back down to the 1150 level and now trading at 1300. Now the fact is that as the U.S. dollar continues to strengthen, which it appears it's going to do, what we're going to see in the foreseeable near future is a sell-off in gold. It has to happen, unfortunately. I know there's a lot of people out there that believe that gold is a strong hedge at this point, and I'm one of them that do. But the fact is that you've still got the banks that have a massive short position in the market, and with the price of the U.S. dollar going higher, it tells me that the gold market has got to drop one more time. And I think it's going to drop down to it's going to test the 1150 level, and if that level doesn't hold, again, there's a chance that we could see $1,000 in the gold market. There's a reason that we always said to you, never leverage your gold holdings. Always own it physically. Don't leverage anything. And now you can see what's happening. If companies are losing their entire business, it's primarily because they went the wrong way in a heavily leveraged currency market. We never do that. I've never recommended any type of leverage to anybody, especially in the metals markets as they got higher. So the fact is that if you own your own assets, if you own your gold, if you own your silver, if you own your diamonds, and nothing is leveraged, the fact is that the market is going through its stages. Now, if you read the newsletter this week, the newsletter is probably the best newsletter that Randy has ever put together. It's loaded with the most important information that you could possibly understand. And the fact is that you need to read this newsletter to understand what's not only happening in Canada and in the United States, but what's happening worldwide, because everything is interrelated. And the fact is that everything that's going on at this particular point, everything that I'm seeing is leading to massive inflation. The debt levels are so high, and if they're going to go with quantitative easing now in Europe, you're going to see that within the next year or two that we're going to have massive inflation. And if you're not ready for that, your whole livelihood can change, because what inflation means is that prices go extremely high and you don't have as much money to pay for things. In fact, food, if you look at inflation right now in Venezuela, it would literally cost you over $100 to buy a loaf of bread. That's what inflation can do to you. And if you find that, your job is not paying as much, the markets are not giving you the money back that you need to survive on, you're going to find that you're going to run into an awful lot of problems in the next 2 years. It takes a lot of planning to make sure that we do the right thing. Now, obviously, we have no control over what these countries do. We had no control. Nobody knew that Switzerland was going to do what they did. They were going to buy their currency, sell the euro, and drop their interest rates in the bank to negative 0.75%. As a result, the Swiss franc went up 30% in one day. If you happen to be in the Swiss franc, you made 30% on your money, and if you were leveraged, you made a fortune. But how about the company that Randy just talked about that went the wrong way and lost $800 million? Those type of things happen all the time. Don't speculate right now. The fact is that you don't want to lose the money you have. Capital preservation is the most important thing. And the fact is that we have programs with my company that are very conservative, that pay high rates of return. First of all, the diamond market is on fire. The more these currency markets get in trouble, the more the diamond market picks up. The fact is that the Canadian dollar has fallen substantially against the U.S. dollar. That hurt our business. A lot of our clients are Canadians, and that 25% drop in the Canadian dollar would have hurt our business. Fortunately, I've traded currencies for 35 years. I hedged the Canadian-U.S. dollar hedge, and basically the reason that I did that is that we had a lot of business going to Canada, a few $1 million in business that I couldn't afford to be affected by the currency markets. So we hedged the U.S. and Canadian dollar. My feeling is that the U.S. dollar could go a bit higher than where it is right now, maybe another 2 or 3 cents. I think that the Canadian dollar has run its course. I think that the Canadian dollar is within a penny or two of the lows that we're going to see. So basically, we're going to be taking off the hedge fairly quickly on this U.S.-Canadian hedge, but what it has allowed us to do was to still continue to do business in Canada, because what we did is we're now able to allow our clients to purchase diamonds that are priced in U.S. dollars in Canadian dollars. So basically, you're going to save 25% at this particular point till we take this hedge off, and the hedge is not going to stay on that much longer. So if you're interested in making money in the diamond market, which is one of the most important markets in the world right now, now is the time to take advantage of that. The other situation that we have brought to you over the last year is a very unusual situation in our rough diamond business. I know it pays a huge rate of return. It's a very, very profitable business that's been in business for 3 generations. What I did is I allowed my Canadian clients to invest in this market with us, and it's a very profitable business. It has been for my partner's family for 3 generations now. Now, I know this is hard to believe, but our returns on our rough diamond business to our Canadian clients is 24% a year U.S., That means that you can invest money with us in a rough diamond business, which increases our business, which makes our business that much more profitable, and we pay our clients 24% a year for 2 years in U.S. money. That means that if you invest $100,000 with us, you will make $2,000 a month for 24 months paid in U.S. dollars. And if you're getting $2,000 a month U.S., at this point here with the Canadian dollar down 25%, when you convert it to Canadian, you're actually picking up $2,500 a month in income for the next 2 to 4 years, depending on which program you do with us. It's a very unusual situation, and clients have asked me, why, if I can borrow money at 3 or 4%, why do I need my clients' monies in order to increase my business? The reason for that is that most of my clients that I've dealt with for the last 10, 20, 30 years have been involved in deals with me over those years. Many different types of deals. So when an opportunity like this comes around, I'd love to include my clients because it's an opportunity in a very, very difficult time to earn another paycheck. Some clients put in 7 figures. On $1 million investment, you're making $20,000 U.S. with us. On $500,000, you're making $10,000. That's more than you would make in an entire year or two keeping your money in the bank. So we're bringing to you programs that, again, are going to give you the opportunity to stay relevant to the market, to be able to not be susceptible to these tremendous upswings and downswings in the marketplace. And within the very near future, on the next drop in gold, we're very close to getting our importer's license for our gold business, and soon you're going to be able to buy, I'll say in February, you'll be able to buy physical gold from us at spot price. And hopefully by that point, gold will have basically have hit its bottom, but I do believe that that is going to happen, and the timing should be strong. You're going to be able to buy physical gold at spot prices with no commissions. We're going to show you how to make money in the gold market again. We're going to show you how to make money in diamonds. We're going to save you 25% on any diamond purchases right now because we hedge the Canadian U.S. dollar, and then we have our program that pays our Canadian clients 24% return on their money every year. So this is what my company is doing to help us get through these extremely difficult times. But there's no doubt in my mind whatsoever, and read the newsletter this week, and you'll agree with me that inflation is not only here, it's coming with a vengeance. And if you don't own hard assets like gold, silver, and diamonds, you're going to find that you are not only going to be hurt by inflation where your standard of living will drop substantially, but on top of that, you have an opportunity to make a phenomenal amount of money. Come with us on this. Read the newsletter this week. Understand what we're doing here in the diamond market, in the rough diamond market, and in our auction business, and it's all there for our clients to profit for. So, again, Randy, the markets are crazy right now. Countries are doing things that make absolutely no sense. They're doing it to try to benefit the people in the country, but it's going to have a negative effect. It's not the time to speculate. It's the time to be ultra-conservative, worry about protecting your money first and making money second, and please do not leverage any positions whatsoever. It'll end up biting you for sure.
One thing Harold always has taught us over the years, when somebody is losing money, there's somebody that's making money. We had the hedge fund lose $830 million. And I remember reading about this on Business Insider. There was a company, and one of their leaders gave a speech. His name is Zach Schreiber. He stood on a stage at Avery Fisher Hall in New York about 8 months ago and made a bold prediction. We believe crude oil is going much lower. And he told the audience there of investors that he really thinks that money's going to be made with oil going down. If you're long, I'm sorry for you. His firm on this pullback in oil made $1 billion. So Harold has always taught us, and we remember this very well, when there's somebody losing money, there's somebody making money at the same time. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number to speak personally and privately with Harold is 1-800-432-1022. We'll talk about diamonds shortly in the second half of the show. Our auction website is hsfineauctions.com, and we'll speak about that too. Obviously, here in Canada, Oil, in particular our province, Alberta, oil is a major concern and consideration. And one of the quotes that I found this week, and it was a must-read quote, Eric Nuttall, portfolio manager for Sprott Asset Management and their oil fund, was on the Canadian Business Channel. And this is what he had to say. At the current oil price, most oil companies in the world are eventually bankrupt. The financial liquidation of the net speculative long position in oil, the largest selling pressure since oil contracts started trading in 1983, has taken the price of oil well below where oil companies can keep production flat, let alone grow production. Given the new reality of CapEx budgets equaling corporate cash flow CapEx, reductions this year are likely to plunge the most in 20 years, with base declines in the United States exceeding 30% and the rig count beginning to implode. Look for production growth to begin to stall out in Q3 of 2015. The industry still requires $65 to $70 a barrel to maintain flat production. And given continued growth in oil demand, the market should rebalance itself by the end of the year, resulting in a 40% rally, he believes, in the price of oil and commensurate rally in some oil stocks. A note from the Canadian Business Channel as well. On another note, the Saudis are losing $500 million per day in revenue on the recent price drop that equals $180 billion annually. That's real money, by the way, in a country that produces oil cheaply but certainly has internal issues. Obviously, as Harold mentioned off the top of the show, with the king passing away, that will complicate things. How long will the royal family like to see that kind of revenue decline? It's something to think about. But here you have the company losing $900 million roughly, a company making $1 billion. Oil exports, the losses are going to reach about $300 billion in the Middle East in general. So it's a very interesting time to be in the financial markets. Listen to our radio show. Get our free weekly newsletter. Keep yourself up to date and speak with Harold. Harold, an expert in the financial markets, gold, silver, diamonds, oil. He's been around for a long, long time. He's an expert. Connect with him at rarecoloreddiamonds.com. rarecoloreddiamonds.com. To speak with Harold personally and privately, call 1-800-432-1022. That's 1-800-432-1022. And we have an outstanding featured diamond this week. It is absolutely stunning. It's a .52 carat emerald cut fancy intense pig argyle. You can see it at rarecoloreddiamonds.com. Go to the featured diamond of the week. You can see video of it there. We're going to come back and talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on January 23rd, 2015. Our time is 9:12 Mountain. Our radio show runs on your favorite radio stations, including 6:30 CHED in Edmonton, Sunday at 3 o'clock. We have a podcast for those that have portable devices, would like to listen to us on the go, on their convenience. All you need to do is type in at iTunes, The World Financial Report on Radio, subscribe to our podcast. It will come in. You can listen at your leisure. We also have two websites, Harold's websites, streaming the show anytime you want to listen. If you miss a show, we have two websites, HESradio.com and rarecoloreddiamonds.com. The rarecoloreddiamonds.com featured diamond of the week is a .52 carat emerald cut fancy intense pink argyle. And this is absolutely amazing. Another stunning diamond. We had a beautiful heart-cut fancy vivid purple pink last week. And this week we have just a stunning diamond, a .52 carat emerald cut fancy intense pink argyle. Take a look at it in our free weekly newsletter. We have a picture, or go to rarecoloreddiamonds.com and click on featured diamond of the week. And Harold, we have a very good article from the Financial Times we'd like people to read. It's called How to Set a Value on the World's Rarest Gems. And we will be happy to send that out as well. But in these times where not only geopolitically things are crazy, but financially, we're really in a currency war. This is why we do the radio show, as we said off the top, to help educate our radio listeners and clients, profit and protect during the times that we live in. And nothing is better to do that than, we believe, rare colored diamonds.
You bet, Randy. Again, it's really an unbelievable time for the diamond market, and I think people are really starting to notice that now. Tremendous articles are being written on it, and again, there's just so much going on in the market. Now, not everybody can buy, a multi-million-dollar diamond. In fact, most people that invest in diamonds do not have that kind of money to invest. With the Argyle mine closing and still being able to buy Argyle diamonds for, in the $30,000, $40,000, $50,000 range, that's where a lot of money is going to right now. People are now starting to realize, the supply and demand situation in a market like that. So I couldn't be more excited about what's happening with Argyle. Again, I've been involved with them for a long time, been aware that the mine was eventually going to close down, and we made it a point to make certain that our clients own those type of diamonds. We'll never, ever get another opportunity to do this again, because there isn't another mine in existence that does what the Argyle mine does. And by the way, Argyle does not only produce pink diamonds. The odd time, a very rare other colored diamond will come out of that mine that's still in Argyle. We know that the odd time a blue diamond will come out of there. The odd time a yellow Argyle diamond. They're very, very rare to get a yellow Argyle diamond that's actually laser inscribed. Gray diamonds come out of there. I just received one of the rarest diamonds that Argyle has ever produced. It's a 41-point, round brilliant, fancy gray blue, VVS2, near flawless Argyle diamond. It's laser inscribed. It's got the laser number on the GI report and on the actual diamond, but a near flawless gray blue Argyle diamond. There's not another diamond that Argyle produces that exists anything like that. So one of our lucky clients is going to be able to purchase this diamond. It's extremely rare. It's selling right now in around the $200,000 range Canadian. Again, which is saving you 25% because, again, we're allowing you to pay in Canadian dollars on a diamond that is normally priced in U.S. dollars. But when the Argyle mine closes, a diamond like this could increase 5, 6, 8, 10 times what the prices are today. It's probably one of the best investment diamonds that you could ever own, and I highly doubt that we'll ever see another diamond like it. It's a 41-point, round, brilliant, fancy gray blue VVS2, near flawless Argyle diamond that's laser inscribed. I saw the diamond this morning, and I couldn't take my eyes off of it. It was literally one of the most beautiful and valuable diamonds we've ever received. And again, I highly doubt that we'll ever get a chance to own another diamond like this. So again, for somebody who is looking for an outrageous investment, to own something that's a one-of-a-kind, this is a diamond that, again, we're able to save you 25% because we were fortunate enough to understand what was happening between the U.S. and Canadian dollars, and we put on a year-long hedge, and I'm almost about to take that off. So some lucky client is going to be able to buy that particular diamond, and it's a collector's item. There's not another diamond that comes out of Argyle that's like that one. We also had a diamond the other day that was actually violet in color, and it's a numbered Argyle piece. So we've got some very, very rare Argyles that are not pinks, but the major attraction, obviously, to Argyle is that once the mine closes, they produce 95% of the world's pink diamonds, and they will no longer be here. To own an Argyle pink diamond today is something that, again, if you have the wherewithal in which to own one, you can find that it'll turn out to be probably the best investment that you've ever made. There's no risk to owning a diamond like that. They're not going to open another mine. They've been looking. There will never be another mine like the Argyle. And in actual fact, if they ever did find another mine that produces pink diamonds, it takes 10 years for that mine to come online. So, again, we're fairly comfortable in the fact that we have something extremely rare in Argyles, and again, this is something that will never, ever be duplicated. When you look at the fact that some of the analysts are talking about the stock market dropping down, Harry Dent, for example, who's got a very strong track record, he thinks the Dow is getting ready to drop to 6,000, which coincides with our numbers, and then he feels the Dow is going to drop to 3,300. So The fact is that a lot of countries are going through a lot of problems with their currencies. With quantitative easing, we're insured of having extremely high inflation, and when that comes, there's only a couple markets that are going to be able to help you in that area. One is going to be diamonds, the other is going to be gold, and those are the two products that we're bringing to you. Again, the diamond market is on fire at this particular point, and again, it's all because the currency markets around the world are so volatile. You don't know what's going to happen the next day when you wake up in the morning. What are the markets going to be like? We see oil prices plummeting. We see the Swiss franc going up 30%. We see the Canadian dollar drop 25%. It's an unbelievable time where most people are scratching their heads and going, what in the world do we do? History will tell you what to do. Own hard assets. That's the way to get through these difficult times. Own physical gold and physical diamonds. Again, yellow flawless diamonds increase by 15% a year. There's very few markets in the world today that increase by 15% a year. They've got to be flawless yellows, though. You don't want to own a diamond that is not flawless as far as the yellow goes, because they're extremely rare, and that's what adds to the rarity of the diamond, the fact that it's a strong color with good saturation and a very strong clarity. Now, the opposite is almost true in pink diamonds. Many pink diamonds are graded strictly on the saturation of color, where the clarity is not all that important. In fact, many of the Argyle pinks are I1 clarities. 40% of them that came to the Argyle tender last year or this year were I1 clarity, which used to be something that we would shy away from. However, we don't shy away from that anymore because 40% of the diamonds that came out of Argyle were that clarity, I1s, and they went up tremendously. In fact, every diamond that came out of the Argyle tender this year sold at record prices. This was the first year that we did not purchase an Argyle tender diamond. The prices were astronomical because the general public is now getting involved and understands the rarity of these markets. So again, just very, very excited about what's happening in the diamond market. You want to go with the best quality that you can possibly buy, the best color that you can get. The fancy light pinks, even though it's not the strongest saturation of color, are very, very popular. We own a couple that are flawless, that are very, very valuable, and even the SI1s, the fancy light pinks, have gone up 20% a year for the last 5 years. That's 100% return on your money in 5 years. You can't do that in any other market. On top of that, Argyle pinks have tripled in price in the past 10 years, and that's nothing compared to what they're going to do in the next 5 to 7 years, because the mine is closing in 5 years. There will not be any more pink diamonds from the Argyle mine. So, again, these are opportunities that very seldom come around. I'm very, very excited about what's going on in the diamond market, and especially what's happening with Argyle. So, again, Randy, at this particular point, not only is the diamond market going up, we are also using our auction business and our diamond business to raise an awful lot of money and awareness for certain charities. Most of our clients know that we do a lot of work with Susan G. Komen, breast cancer charity. We raise a lot of money for that charity, and in return, we get introduced to very wealthy families that buy these type of diamonds. And that's imperative to my business going forward, because, again, when it comes time to sell our diamonds in 5 or 10 years from now, we want to have the who's who of clientele, and that's happening with our relationships with certain charities. We have a major auction coming up on March the 2nd with a major charity, and then on March the 19th, probably the biggest auction that we've ever had is going to be for the Girl Scouts of America. So, again, it's a win-win situation because we get to raise money for excellent charities and good people, but on the other hand, our business grows because we get introduced to very wealthy families that buy our diamonds. So, this is the route that I decided to take my business. Again, with the Canadian dollar falling so substantially, we had to look for business elsewhere. And again, we're doing well now in the States, and we're starting to build up some business very strong in Europe. And again, that's very important to the future of our business. So again, our auction business is growing. What you're also going to find is that we're going to bring to you other products. Soon we're going to be able to do an auction for extremely rare classic cars. We had one scheduled for February the 28th. We just didn't have enough time to do it on that particular date because just filming the cars alone would have taken almost a month. So we are going to bring to you some auctions that are coming up in other products aside from diamonds, but one of the biggest auctions we're going to do in the near future is a Ferrari and rare diamond auction, where we'll auction off a Ferrari or a comparable classic car, and then the next item up for bid will be a substantial diamond. This way the husband and wife can both enjoy in shopping on H. Siegel Fine Auctions, which is growing like crazy. So again, Randy, this is what we're doing to get through these extremely volatile and difficult times. It takes ingenuity to get through these times, not just to sit back and go, oh, woe is me, I have no control over what the markets are doing, and misery loves company, other people are in my situation. That's not the way that we look at things. There are opportunities, and as Randy mentioned before, for every winner there's a loser. For every buyer there's a seller. You know, what Wayne Gretzky once said was, where everybody goes to where the puck is, I try to go to where the puck is going to be. I always remembered that. Was always a huge Wayne Gretzky fan. And that's something that I remembered my entire life. And I also put into practice on a daily basis. So the fact is that don't go where everybody else is going. Don't go to the stock market. At this particular point, that's the worst place to put your money, and the fact is that the stock market's getting ready to plummet. Low oil prices, major concerns about currencies all around the world, the potential of extremely high inflation. That's going to wreak havoc on the markets. You want to be in the more conservative markets. You want to be in diamonds for sure, because they're very conservative. They don't trade on exchanges, so you don't get the same potential of loss that you get in markets that trade like stocks and commodities. The other thing is gold. If we see this next pullback in gold, and we'll let you know when to buy, you're going to be able to buy physical gold, which is what you want to own, but also you want to own it at a great price. You don't want to pay high commissions and storage fees and interest and all that kind of stuff. You want to own your gold. You want to own it at the best price possible and make profits at the right time, and that's what we're going to bring to you. Physical gold, 99.9 clarity, and then on top of that, you're going to be able to take delivery of it and pay spot price with no commissions. That means if gold goes to 1,000 and you buy it at 1,000, at 1,001 penny, you're actually in profits, and that's what we're going to bring to you, hopefully, in the month of February.
And we should say congratulations to Wayne Gretzky becoming a grandfather, Harold.
Yes, terrific for him. Got a beautiful daughter. You know, I really liked his son-in-law, but I think that he's in trouble. I think that they're saying that he is possibly into drugs type of thing. So always been a huge Wayne Gretzky fan, and always been a huge hockey fan, and still am. I played hockey since I was a little boy, since I was 5 years old, but I played until I was 45. Even here in the U.S., I still continue to play. So love hockey, love Canada, just want things to go well. Again, don't forget, we also have brought to you a very unusual opportunity that I really never advertised because it just sounded too good to be true. But what we tried to do was put together a program that our Canadian clients could invest in and do well with us. And basically we have that. We have a rough diamond business that will basically allow you to invest in our rough diamond business, which is extremely profitable, and we will pay our Canadian clients 24% return a year in U.S. dollars. That means that if you put in the minimum, which is $25,000, you're going to make every single month $500 U.S. If you put in $100,000, you're going to make $2,000 U.S. And with the currency change the way it is, you're picking up another 25% in the currency market just because the Canadian dollar, when you convert it to American to Canadian, you're going to pick up almost 25%. Our clients that are involved in this are loving this. And again, if you're struggling, if you're concerned about your job, if you need a second paycheck, this is the route for you to go. Put money, and by the way, all of the principal is totally 100% protected because whatever you invest, we back up with physical diamonds. So there's no potential loss of your principal because if you put in $100,000, we're going to put a $100,000 diamond in there wholesale in order to protect your investment. So if you're interested in that, please contact us as soon as possible. Again, with interest rates the way they are, this is an unusual opportunity, but it is something that, again, has been in operation for 3 generations now.
Our featured diamond of the week from rarecoloreddiamonds.com, a .52 carat emerald cut fancy intense pink argyle. see it at rarecoloreddiamonds.com. We have it in our free weekly newsletter, and we have a picture there as well. Connect with Harold, rarecoloreddiamonds.com, or speak with Harold personally and privately, 1-800-432-1022. The article we want you to read in our newsletter is called, and it's from the Financial Times of London, How to Set a Value on the World's Rarest Gems. Increasingly colored or fancy diamonds have long fetched high prices at auction, but in recent years, those prices have soared. In 1960, Van Cleef and Arpels bought a 300-year-old rare pink diamond from India's Golconda mines at Sotheby's in London for $70,000, equivalent to $555,000 at today's prices. It weighed 34.64 carats and was known as the Princey. The stone sold again 2013 at auction for $39 million. And they go on in this article to talk about Eden Rachmaninoff, a man that Harold knows, starting up a not-for-profit organization that is actually going to keep track of the prices of fancy colored diamonds. And they go on to say in this article, more than 90% of the world's pinks come from the Argyle mine in Australia. But even this rich seam yields infrequently. A report by the trade magazine Mining Markets estimated that for every 10,000 white diamonds mined globally, one colored diamond emerges. Jenny Farmer, the global brand director for De Beers, says the world's wealthy are captivated by this rarity. People are looking for the individual diamond that captures their imagination. As the search for something bespoke continues, the allure of fancy-colored diamonds increases. Given this trend for what they believe is going to be continuing for a long time, it's really the most concentrated form of wealth in the world, a portfolio in your pocket. And doesn't that sound very familiar, some of the things they're saying in this article? Harold wrote an article back in August of, it was 10 years ago, 2005. And 10 years ago, 2005, August, Harold wrote an article, Naturally Fancy Colored Diamonds, the Best Kept Secret. And Harold said to us it was real estate in your pocket. And it was obviously a massive winner because over the last 10 years, people that have invested in diamonds have done so well. And Harold, you take a look at our featured diamond this week. This would be a great diamond to start a portfolio with. Real estate in your pocket, a portfolio in your pocket. A 0.52 carat emerald cut, fancy, intense, pink Argyle. And people can see it at rarecoloreddiamonds.com, the featured diamond. But this is a beauty.
It certainly is. First of all, it's a big diamond because 95% of the Argyle pinks are under a quarter carat. Hence, what they say is that they are just the most valuable diamonds in the world, and they're small, but they're the most concentrated form of wealth in the world today. Also, that diamond is an emerald cut, which is extremely rare, and the size of it is just huge for an Argyle pink. So, again, it's an amazing diamond. It's a diamond that we anticipate will increase in the next 5 to 10 years tremendously. There's no doubt that diamond will make the new owner a tremendous amount of money. And then we own 8 Siegel Fine Auctions, which is a company that will sell your diamond for you when the time is right to do so. We only make money when you make money. We get 10% of the profit, and that's how we make our money. So, again, I'm very excited about what's happening with Argyle. Again, these opportunities very seldom come around that a mine is going to close that produces 95% of this particular diamond, and if you happen to own one of those, you're going to be in for a huge payday. And that's what we've prompted our clients to do over the last 10 years, is to get involved in these diamonds while the prices are still low and take advantage of them when there's no more of them. So, again, many of our clients have, but you're talking about a tiny market. You're talking about 200 carats a year, and if you poured the entire year's production of Argyle pinks into a champagne glass, it wouldn't even fill the entire glass. That's how small this market is. But it's the most concentrated form of wealth in the world. Just look up Argyle and look up the Argyle tender, and you'll see exactly what I'm talking about.
Our featured diamond of the week, a 0.52 carat emerald cut, fancy, intense pink argyle. Speak with Harold about it at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. It was interesting to note this week that in the United States they had their big State of the Union address with the president down there, Obama, basically saying, hey, everything's great. Everything's perfect down here, which, you really have to wonder what's going on in his head. There is an interesting note, and it's quite sad because the majority of U.S. public school kids are poor enough to receive free lunches. The share of public school students who qualify for free or reduced lunch in the United States has grown to 51%. In Mississippi, it's 71%. And yet he stands in front of the country there in the United States and says everything is okay. We're through the Great Recession. It's quite sad. Some of the other things that were going on geopolitically that I think are important to mention, and it does fall into owning hard assets. U.S. spies tapped North Korean computers before the Sony hack. I guess they were attacking prior to that happening. And the Ukraine fighting continues. The fighting deepened in the East Ukraine. Casualties rise and truce is all but dead. Intensifying battles, mounting death tolls, and new accusations of Russian interference in the eastern Ukraine have marked some of the worst fighting between government troops and pro-Russian separatists since last summer. That situation is very serious. Also in Venezuela, as Harold said, it's just mind-boggling what's going on there when it comes to people waiting in lines for diapers and food. In fact, a new job has sprouted up, and that is standing in line and being paid to do it for somebody. In Argentina, a prosecutor who accused the president, Fernandez, of an Iran plot was found dead. And in Argentina, the citizens came out and protested. Also, Israeli airstrikes killed Hezbollah and Iranian commanders in Syria, and that was another scenario that happened during the week. And we are now 2 minutes closer to doomsday. Our leaders are failing, and the planetary destruction is nigh. That is the message sent by the Bulletin of the Atomic Scientists. They moved the historic doomsday clock forward by 2 ticks. It's now 3 minutes to midnight. And Harold, geopolitically, whether it be geopolitically or financially, what we're seeing here is obviously currency wars, people debasing their currency. Geopolitically, things very unsettled. And with about a minute left, that's why we advocate time and time again. And this is why we do our show, so people can profit and protect the money they have, but have hard assets in their portfolio today.
You're 100% right. We battled for the last 3 years and, at times lost credibility because the things that we were saying, they were saying the opposite, and the stock market rallied to record prices and all that. But we stood by our predictions because, again, this is not a short-term situation. This is our lives. This is what we need to know, this information in order to move forward. And again, we're positive, and we were positive 3 years ago, and we're still positive today that the recommendations that we're making are the right recommendations, and what's going to happen is now happening. We talked about currency devaluations. That's why we so heavily talked about diamonds, that there was going to be heavy devaluations of currency, and that's why you want to own a diamond, because it could be sold in another currency. And that's exactly what's starting to happen right now. Believe me, we know our business. You're going to see a massive rally come in gold. You're going to see the price of diamonds skyrocket, and you're going to see the stock market in the United States absolutely plummet. We need to be smart. We need to be conservative, and we cannot speculate. Please get in touch with us. Get our newsletter this week. It's free. Learn about what's happening in diamonds. Contact us about our 24% return on investment, and again, see if that's the right situation for you.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.